Did you get a shockingly high Medicare Part B premium? In 2026, the standard Part B premium is $202.90. But if your earnings exceed certain thresholds, you'll see an IRMAA charge added to that. IRMAA stands for Income Related Monthly Adjustment Amount. IRMAA can make your monthly payment double or even triple. I know, it's shocking. By the end of this video, you'll know three things. One, how Medicare determines the IRMAA surcharge that you get stuck with. Two, what to do if Medicare made a mistake and overcharged you. It happens. And three, how to factor in the IRMAA impact of your retirement income for future years. Let's dive in. IRMAA is based on your modified adjusted gross income from 2 years ago. So your 2026 Medicare IRMAA surcharge is based on your modified adjusted gross income for 2024. And that amount is compared to the IRMAA income brackets for 2026. I know, it's weird. Sometimes I think they make it complicated on purpose. Let's look at the income brackets, and you can see how this all works. If you're a single filer and your modified adjusted gross income is $109,000 or less, you pay only the standard premium of $202.90. If you're married, filing jointly, and if your modified adjusted gross income is $218,000 or less, you pay only the standard premium. But watch what happens when you make even a penny more. If you make $218,001, you pay an extra $81.20 on top of the base premium. Now, you each have to pay $284.10 because you both have to pay IRMAA. So your joint Medicare payment now is $568.20 a month. In a more intense example, let's say 2 years ago, your joint income was $274,000. You would end up paying $405.80 each for Medicare Part B. You're subject to the Part B IRMAA charges, whether you have original Medicare, which is Part A and B. In addition, if you have to pay IRMAA, you also have to pay an additional premium on your Part D monthly premium. On the far right side of the table, you can see how the IRMAA surcharge is added to your Part D premium based on your modified adjusted gross income. And that cost is added to your Part D standard premium. Likewise, if you chose a Medicare Advantage plan, you still have to pay Part B standard monthly premium. So you're subject to the IRMAA income brackets. And IRMAA is added to your base monthly premium. While many taxes are progressive in nature, it's not that way with IRMAA at all. There's no phasing in period. You can pay thousands more a year in Medicare premiums, depending on the income brackets you fall into. The more you make, the higher you climb up that IRMAA ladder. And the higher you climb, the scarier it gets in terms of your cost per month. Now, you know what happens when your income increases. There are other money moves to think about. You might want to put these on your IRMAA watch list, okay? Just to be prepared. This includes increasing your 401k withdrawal rate or doing the same with other investment accounts. Maybe selling a stock you've had for ages and you make a $5,000 gain. Maybe that bumps you up into a new higher income bracket. And at around the age of 73, you're going to have to think about required minimum distributions. And that becomes an issue because the increased income can lead to a big IRMAA surcharge. Now is the time to talk to your financial advisor for that specific situation. How about some possibly good news? There is a loophole to get you out of paying IRMAA, and most people have never heard of it. When I got a letter from Medicare a few years ago, I was shocked by my IRMAA surcharge. I started researching it and realized that my situation was one of the exceptions that protects you from IRMAA. In December 2023, I left my full-time job at U.S. News and World Report to start a YouTube channel. I was 66 at the time, and I switched from my company's healthcare coverage to Medicare. In 2024, I was charged for IRMAA because 2 years earlier, in 2022, when I was still employed and working full time and making a lot of money. But leaving your job to retire is a life-changing event in the eyes of Medicare. You can appeal this. And let's take a look at some other events that might qualify you for a life-changing event. This is a page from Form SSA 44, and this is the form you use to appeal the IRMAA decision. If you experienced one of these events on this list, such as work stoppage, divorce, death of spouse, you need to file an appeal. And I've got a link to the form in the description for you to make it easy. When you get the form, you'll find several steps to follow. Depending on your situation, there are also supporting documents you may have to track down to support your case. For example, you might need tax returns for the years in question, or a death certificate if you lost your spouse. So the instructions are pretty clear on the form about what kind of documents you need. So read it very carefully. If you stuck with me to this point, I applaud your attention span. Honestly, Medicare has no idea if you have had a life-changing event. So they will assume that you didn't. It's up to each of us to check their work and take action if needed. If you got stuck with IRMAA or you're worried about it in the future, I hope you found this video valuable. If you're working past 65 or plan to, take a look at the video on the screen. In that video, I share how to avoid a lifetime penalty for late enrollment of Medicare. The penalties never end with these programs. If you have any questions, please leave me a comment. I will get back to you. Thanks for watching, and I will see you in the next one.